What if I told you that an algorithm, just lines of code, might soon outperform the greatest investor of all time? Yes, we're talking about Warren Buffett, the Oracle of Omaha, the man who turned $10,000 into over $100 billion. But now, AI is stepping into the ring. Some say it's faster, smarter, unbiased. But can it really beat decades of human wisdom, instinct, and experience? Today, we dive deep into the data, the tech, and the truth behind one of the boldest claims in finance. Can AI actually beat Warren Buffett at his own game? Today, we're digging into that answer, and it's not as simple as yes or no. Let's start with the man himself. Warren Buffett's strategy is built on three timeless pillars. Value investing, buying undervalued businesses with strong fundamentals. Long-term thinking, holding stocks for decades, not days. Behavioral discipline, not panicking during market chaos. He doesn't chase trends. He reads annual reports over Twitter threads, and he famously said, "The stock market is a device for transferring money from the impatient to the patient." Buffett's track record? Averaged over 20% annual returns for nearly 6 decades. Beat the S&P 500 over 90% of the time. Turned simple decisions like buying Coca-Cola and Apple into multi-billion-dollar plays. But in a world moving at algorithmic speed, is Buffett's slow and steady mindset still relevant? Enter AI. Unlike Buffett, AI doesn't need lunch breaks or 5 hours of reading a day. Modern AI tools can analyze thousands of companies, earnings reports, tweets, sentiment, trends, and technical indicators in real time. We're not talking about simple bots. We're talking about platforms like Kavout, using machine learning to rank stocks with chi-score. Trade Ideas, offering AI-generated trade setups with historical backtesting. Numerai, a hedge fund that crowdsources AI models from data scientists globally. These systems are emotionless, lightning fast, and always adapting. And the results? AI-powered funds like Equibot, using IBM Watson, have claimed to outperform the market in certain cycles, especially during high volatility periods when human emotions get in the way. Even some robo-advisors now use AI to dynamically adjust portfolios. No Buffett-style letters needed. So, is AI winning? Here's where it dominates. Real-time data analysis, pattern recognition across decades of market history, 24/7 trading capability. No fear, no greed, just numbers. Here's where Buffett still shines. Understanding moats, brand loyalty, consumer psychology, seeing through management fluff, navigating black swan events like COVID, regulatory shifts, or cultural trends. AI is trained on past data. It can predict based on what it's seen. Buffett, and remember, the market isn't just math, it's people, emotion, herd behavior. Even the best algorithms can struggle to explain why GameStop suddenly surges 2,000%. Because that's not in the data, that's in the memes. So what's next? The smartest firms aren't ditching Buffett-style investing. They're combining it with AI. Imagine Buffett's principles powering portfolio decisions, AI filtering out noise, spotting inefficiencies, and optimizing entry or exit points. This hybrid approach is already happening. Bridgewater and BlackRock use AI for insights, but final calls still come from human managers. Retail apps are letting investors train their own AI models to match their investing style. In the end, it's not AI versus Buffett, it's AI plus Buffett. A world where human intuition and machine precision finally collaborate. So, can AI beat Warren Buffett? In short bursts? Yes. In emotionless pattern matching? Yes. But in long-term wisdom, patience, and the art of understanding humans? Not yet. But together, they just might be unstoppable. Would you trust an AI to manage your money over Warren Buffett?